We're here speaking with Peter Gooday from ABARES. Peter, we're looking at farm debt figures. You've got some data out for us during the week and the end of September.
Yeah, so we had a look at what the trends in farm debt have been up to the end of 2021. So at a national level, the value of loans and leases owed by the farm sector across the country was $94 billion at 30 June 2021, which is an increase of about 6% from the year before. And that increase was sort of consistent across all states and territories, but a bit bigger in Queensland and New South Wales. So some people sort of think increasing debt is not a good thing, but we're seeing it sort of the opposite, in that rather than being a cause for concern, its increased lending activity in the ag sector is an encouraging sign in that farmers are looking to expand and invest in their businesses.
Yeah, that is good when we look at it that way. Have you got a figure there in terms of just how that measures against, I guess, property value increases? I imagine that it's sort of been roughly the similar.
Yes, the increase in lending hasn't been as substantial as the increase in land prices. So, one of the things that's happened is that land prices have increased, which has provided farmers with greater equity to support increased borrowings. And at the same time, interest rates have been, historically low over the last several years, and it's almost a perfect storm. We're coming off historically high farm incomes with a couple of really good seasons in a row, and the current one, if anything, is too wet in some spots. So that's all improved farmers' capacity to service debt.
And the figures you're sharing there with us up to 30 June 2021, of course, but the latest that you can analyse. But is it safe or fair to speculate at this stage that there might have been a contraction in that growth in this year, given the cash rate's been rising?
That's right. So the cash rate's been rising, and that'll affect different people differently, obviously. But in aggregate, we'd say that the ag sector's in a pretty good position to cope with that. So we've had very good commodity prices. We're coming off these two record-breaking seasons. Got another good season by the look of it now. So farmers have got higher incomes now than they have previously to help pay down some of those debts in the short term. So farm incomes are less vulnerable now to rising interest rates than they were in the 1990s or the early 2000s. So we see people really struggle with debt when incomes fall substantially. So, we all know farm incomes go up and down, more than in other sectors. So it's more the case that we get debt servicing problems with extended droughts and that sort of thing, rather than the types of increases in interest rates we've seen recently. But, obviously we'd all prefer to pay less interest than more.
Yeah, it's mind-boggling to think it wasn't that long ago there was a lot of complaint from the rural sector about indebtedness to banks and how banks were handling, I guess, the debts that farmers owed. But it does sound like, looking deeper into these figures, that it is maybe some of the bigger players that are loading on the debt and maybe not so much the smaller family farm.
Yeah, spot on there. So you need to keep this in a bit of context. So the average figures hide a fair bit of variation across different farms. So a lot of that debt is held by a very small number of large farms that generate sort of high cash flows and are able to finance higher debt levels. So about 5% of broadacre and dairy farms accounted for almost half of aggregate debt, and nearly 50% of farms have very little or no debt. So there's a big difference between sort of the people that are investing heavily in expanding and people who are maybe not investing so much, but have certainly got substantial equity in their property and are probably looking at the opportunity to expand maybe.
Yeah, that big 5% figure that's holding almost 50% of the debt, as you say. Was there a sort of state-by-state breakdown or an element to where that's happening more? You mentioned Queensland more broadly had gone higher into debt this year in recent figures.
Yeah, so that probably just comes off the back of what had happened season-wise prior to that. So New South Wales and Queensland went more heavily into drought than the rest of the sector. So there was probably a bit of more of a rebound coming there than elsewhere. And the debt numbers also go with average farm size. So Queensland average farm sizes tend to be bigger than the national average. And we sort of see the same thing in the Northern Territory and Western Australia as well. So it's the case that bigger farms take on more debt, mostly because they're able to service that debt better, but also because that's where the expansion in farm size is mostly not in the small farm sector. It's in large farms getting bigger and sort of medium-sized farms turning into large farms.
Now, Peter, ABS keeps track of these figures. How long have you been doing that for, and what's the main reason you do keep track of these farm indebtedness figures?
So we've been keeping track of sort of farm financial performance figures since the 1970s, and the main reason we do it is so that government and policymakers have sort of got a finger on the pulse in terms of how the ag sector's going, so that when things like droughts come along, they know, where the pressure points are, how much of an issue is debt, what might they be able to do to help.
Yeah, I guess it gives us an objective basis other than maybe what the banks might say is the level. We've got something that's been reported in from the farm sector about how much debt they're actually carrying.
That's right, and it's something that goes next to the sort of anecdotal information that you get farm by farm. So when you sit back and look at what the averages are and what the distribution of debt and income looks like across different farm types, across different regions, you get a much better picture about, what's actually happening.
Yes, old farm legend that when the bank manager came, farmers used to go running out the back paddock. Now they seems they're making him a coffee to get some more finance.
That's right. It's probably the other way around now. The bank managers are fighting amongst themselves to get to the farmer.
Absolutely. Peter Gooday, the Assistant Secretary at ABS. Thanks for that update on where we're sitting with farm debt. Great to have you with us today on Flow.
Not a problem. Thanks very much.